Hello friends, welcome back to Trade Like MBA channel. In this video, we will discuss about the recent intervention of Bombay Stock Exchange into the broader market so that small and mid-cap crisis can be resolved. For those who are unaware of the recent situation, there has been a massive rally brewing in the small and mid-cap segments, that is stocks which aren't really that huge. On most occasions, their market capitalization lies anywhere between a few hundred crores to about 20,000 crores. But the rally is more apparent as you go down the descending order of the market size. And when you are looking at small companies with a market cap of a few hundred crores, you'll start seeing some crazy stuff happening. This is primarily due to retail investors' frenzy over the small stocks in India, which has reached such extremes that shares of some companies that aren't booking any sales, let alone profits, are going through the roof. Some of these companies include Transglobe Food Limited, a fruit jam maker that has skyrocketed more than 4,300% this year, and real estate services firm Shri Pre-Coated Steels Limited, which has jumped 1,300%. Both companies booked losses and had no sales in the latest fiscal year. Now, one could argue that retail participants know something about these stocks that nobody else does. But in all honesty and in realistic terms, that's probably not an accurate assessment. In many cases, we can see that rallies of these kinds are primarily driven by a group of individuals who are dabbling in small quantities. So it's like this. If only a few stock exchange hands, it's likely that you'll witness a massive fluctuation in the prices. Imagine just two people trading a stock. If one wants to buy a stock at a 10% premium and if the other person sells it to him at that price, then all of a sudden the last traded price jump becomes 10%. So with small volumes, one could artificially drive prices higher. In some cases, you could even hire stock operators who will use an elaborate network of dealers and professionals who will bump up the prices artificially and then offload them to the general public once the prices become attractive. There is always a retail investor looking to make a quick buck off the stocks on the rise, and once the dust settles, they are often left with a penny stock that is pretty much worthless. So due to this reason, the Bombay Stock Exchange thinks that it can do something about this. And on that note, they released a circular detailing how they'd impose price caps if they witness a sudden abnormal interest on any particular stock. For instance, if a stock has rallied 6 times or greater over the past 6 months, 12 times or over in the last 12 months, 20 times or over in the last 2 years, and 30 times in 3 years, they'd be subject to a special price limits, that is, if you intend to buy or sell these stocks, then you will have to contend with a weekly, monthly, and a quarterly limit in addition to a daily price limit. So, the next question that will pop in your mind is that what's the daily price limit? Well, with most stocks, there is a circuit limit of 2 to 20%, meaning if the price does breach this threshold, then you can't trade with that stock. However, with the new circular in place, you have another condition where you'll see a bunch of stocks being subject to weekly, monthly, and quarterly limits as well. In fact, the moment people realized trading could be restricted in select stocks, there was a sell-off. People panicked and prices of small caps tumbled. There were others who even criticized the move, citing the needless intervention. And soon enough, BSE was forced to update its circular. They added that the restriction would only be imposed to an even smaller group of stocks belonging to X, XT, Z, ZP, ZY, and Y groups with a market cap of less than 1000 crores and a price greater than Rs 10, thereby reducing the pool of stocks that would have been impacted by the BSE intervention. So in the end, the bottom line is that BSE doesn't want the small cap market to overheat and explode, and they are willing to intervene at some level if it means protecting the interest of unsuspecting retail investors. So friends, that's it for this video on BSE and how it resolved the small and mid-cap crisis. If you like this video, then do like and subscribe the channel for more future videos. Till then, thank you for watching and happy learning.